What was it like? I mean, going from single family to a $6.5 million multifamily. And that
It
surely was a
was
little nerve wracking.
amazing. It's something I'd wanted to do for a long time, Ken, but I just didn't have the capital to take down something that large. And so it was super exciting to be able to find the deal and say, okay, now I have a deal that I can't take down. How am I going to take it down?
Welcome to the BiggerPockets Best Deal Ever show. I'm your lovable host, Ken Corsini, who with my wife, Anita, have flipped over 800 houses in Atlanta since 2005 and even have a show on HGTV. But this show isn't about us. It's about all the amazing real estate investors out there that are crushing it. It's about their stories, their best deals, how they sourced them, how they funded them, and what we can learn from their experiences. This is the Best Deal Ever show. Hey, this is Ken Corsini with the Best Deal Ever show, and today I am joined by my good friend, Anna Kelley. Anna, how you doing?
I'm doing great, Ken. So great to be here with you today.
Yeah, good to be with you as well. Now, you are out of the Pennsylvania market, is that right?
I am. I'm in a little town called Hershey, Pennsylvania, where the chocolate's made.
I'm sure some people have heard of Hershey, Pennsylvania. That's amazing. It's funny. I actually grew up going to Oakdale, California, where the other Hershey chocolate factory is. So my aunt and uncle lived. It was like my favorite thing to do as a kid was go and do the tour of the chocolate factory.
Oh, it's awesome. And I bet it smelled really great too.
That's what's amazing. People don't realize, like the chocolate factory, you can smell chocolate from miles away, right?
Yeah, but you get the benefit of the smell plus the sun. It's a little colder here.
That's true. Yeah, in California, it's a little sunnier. Now, how close do you, where do you live in relation to the actual factory?
I'm about 5 minutes away from the factory.
So can you smell it from your house?
On a certain whiff and a certain day, depending on when the wind blows, yes.
That's amazing. Now, do you guys do the tour? Have you done the tour so many times you're sort of over it?
Yes. I have 4 kids, 8 to 16. So when they were little, we were like, okay, it's a dreary day. What do? You go to the chocolate world and do the little cow ride and tour. And yeah, so we wore it out, but they still enjoy it from time to time.
Oh yeah. And of course they gave you the free chocolate bar at the end of the tour, right?
Yes. That's the best part.
That's the best part. That's all I remember as a kid. Well, so what is real estate like there in Hershey, Pennsylvania?
It's really this hidden gem, Ken, that I just am so thankful for. So basically, I moved from Houston, Texas, where there's a ton of competition and,
Sure.
A lot of stuff happening. And generally, real estate investors are thinking about these big MSAs where they can get deals. But these little areas like Hershey, it's actually very financially and demographically diverse. And so you've got a lot of different employers other than just Hershey. We've got manufacturing and industrial, trucking, huge medical and technology, all kinds of stuff. So we have a very diverse upper scale economy, which makes for really great, single family home flips, rentals, larger apartments. It's just really a great space where people want to live and they'll pay more money to live here than elsewhere.
Interesting. Now, where is it geographically in the state? I can't really picture where it is.
It is very south central. It's about an hour southwest from Philadelphia.
Okay. I gotcha. And does it feel somewhat rural then where you are? Or does it feel more metropolitan?
Coming from Houston, Texas, it was like culture shock, truly
Really?
rural.
Really?
It's known as Amish country. We see horses and buggies on the roads,
Oh, yeah.
So it's growing. It's about 25 minutes from Harrisburg, which is the capital of Pennsylvania, but it's nothing like an Atlanta, a Houston, a Philadelphia. It's really a small market.
That's pretty cool. So now most of your investing, is it typically single family, and are you investing there in Hershey, or what's your business model look like?
Sure. So I have 5 different REI business models just for different sources of cash flow. So I started out buying and flipping single family homes in this area. I had gotten into the market in Houston doing the same thing. And so I did some flips, and then I kind of migrated primarily into going through the flip process, but keeping them as rentals. And so I update them, renovate them, cash out refi, and then keep them as rentals. So I have rentals anywhere from singles to duplexes, a lot of 4-unit apartment buildings, some vacation rentals, and now I've started to scale up into the much larger multifamily space. But I'll do any deal that's a really great deal in my area where I can make cash that kind of fits the right bucket.
Yeah. So what's your primary model right now? Is it still kind of flipping, or are you now mostly focused on multifamily?
I'm mostly focused on multifamily investing. Okay. And we're basically doing a flip in these multifamily deals because we typically buy them and hold them for 3 to 5 years and reposition them. So we're going through all of the updates to the interiors and the exteriors, just like you would on a smaller flip. Yeah. It's just that they're valued based more on the operations and the net operating income than they are on a comp basis. Sure. And so we're basically flipping apartment buildings instead of flipping single family houses.
Yeah, absolutely. And are most of those apartment buildings in Pennsylvania, or are you kind of all over the country?
I'm starting to move all over the country. You know, I started out doing mostly things here in central Pennsylvania, and I still do. But I just actually purchased 250 units across 2 apartment buildings there in Atlanta, in your area.
Right in my backyard. That's fantastic.
That's right.
How did you find deals in Atlanta? Are you just working with a nationwide broker?
You know, this particular deal, I had a partner who sourced the deal, and I was brought in to help with the due diligence and capital raise, and I'm handling the asset management. So a lot of times in these larger apartment deals, you're really working with a team of a couple of people who are the general partners. Maybe somebody finds the deal, somebody, helps run the deal, someone has a more of a capital raise function, but it's really a team sport more so than the single family flips.
No, definitely. Hey, so what's the pricing like in Hershey, Pennsylvania? What can you buy single family houses for, and what do they rent for? Just curious.
Sure. So I'd say a class A, newer, nicer home in the Hershey area is going to be between $450,000 and $700,000 for a 4-bedroom.
Oh, dang. That was more than I expected.
It's very nice and very high end. Now, if you're moving to a class B area kind of nearby, a little nicer than for first time home buyer, but new builds, you're looking in the 400,000 range. And then the first time home buyer range, which we really try to target for most of our flips, are somewhere in the $150,000 to $175,000 range.
Okay. And that's where most of your rentals are in that price point?
Yes. Yes. Yeah, and even a few that are smaller. We have a lot of townhouses in this area. So I've got, multiple townhouses that right now would sell for somewhere between $125,000 and $135,000.
Okay. And what sort of rents do you get on something like that? They cash flow pretty well?
They do. Typically, I try to be all in at about $100,000, $110,000, and get a rent of about $1,200 a month for those types of townhouses.
That's great. You're beating the 1% ratio there still. So
sure.
That's fantastic. Interesting market. That's so funny. I've never met anybody from rural Pennsylvania that's really kicking butt in real estate. That's awesome.
Yeah. It makes it really great too, because I don't have a ton of competition. Now that's kind of changing, with a lot of great shows like yours where people are seeing what you can do. We have more and more people wanting to get in, but they're really, bidding up the prices. So the hardest part about it right now is just getting a good property at a good price point. Yeah. But once you're in, you basically have to be able to take on the dirtier properties that nobody else wants. Yeah. And that's where you make your deals in this area.
It's definitely, I think nationwide, you could safely say it's more competitive right now than it's been in a long time to find a deal.
For sure.
What are you guys doing to source deals? Just out of curiosity.
So locally here, a lot of it's been word of mouth. I get a lot of estate attorneys now bringing me deals before they, have their clients put them on the market. Mm-hmm. I have a lot of local brokers and realtors who know the kind of properties I look for. And I've gotten a ton of off-market deals that way. Wow. I also mail. I've kind of found my sweet spot is 4-unit apartment buildings. I like those even better than my singles in terms of the ones that I'm going to buy and hold. Yep. And I'm I own more of those in my area than anybody else. Wow. So brokers and clients now call me for those. And then I target mail those properties, pretty often as well. So a lot of it's word of mouth and off market is what I go for. But I also find properties on auction websites, even properties listed in MLS, because again, I'm not in a major metro where there's tons of competition. Yeah, right. It's like everybody else. You just beat the streets, have, a bunch of different fishing poles in the pond and figure out what works. Absolutely. That's cool. So you've done a lot of deals. Obviously you've ventured now into multifamily. Is there a particular deal that stands out as your best deal ever? Sure. My best deal ever for sure is the first larger apartment building that I did that I was able to find and bring in 2 JV partners. So we were able to buy a 73-unit apartment building in Hershey, PA that had 44 storage units attached to it. Really? And basically we bought it at a great price point. It was off market. Uh-huh. And we are going in and basically going through a minor flip on these units, updating units, raising the rents, cutting the expenses to raise the value. And that will allow us to make a couple $1 million in a few years, on the sell as well as cash flow on that thing, for the 3 to 5 years that we'll own it.
Wow. Okay. So let's talk about how'd you source it? Where'd the deal come from?
The deal was a word of mouth deal. Again, I had an acquaintance relationship with somebody that I ran into in town, and, they had asked me about my rentals, and I told them I was moving into larger buildings and I was looking for a larger building to take down. And she said, my husband's about to sell a building. We're listing it next week. We have the marketing package and it's ready to go. And as soon as I knew where it was, I said, please give me the opportunity to see it first. We set up an appointment. I saw it the next day, and I preempted it going on the market by negotiating a deal at his kitchen table.
Wow.
It was amazing. Yeah.
So what did you end up negotiating the purchase for?
So we purchased it for $6.5 million, which was just a little under $85,000 a door, not including the self-storage units.
Okay.
And that was about a 6.3 cap. So when you're buying apartment buildings, instead of on a comp, you're buying them basically at a cap rate or a market rate. That's a multiplier of the rents, the net operating income. So we got it at a really good cap rate for today's market for the type of apartment building it is. But really the sweet thing was we had so much upside in the rents because the seller had owned these buildings since they built them in 1985 and just were not raising rents on their people. They didn't have a mortgage. And they kind of had the attitude of the devil you know is better than the devil you don't. Keep your tenants there, keep them happy. And so our real upside, even though we didn't get it at an amazing cap rate, the key thing was we knew we had significant upside in rent bumps, even without doing a whole lot of renovations to the units.
Wow. What sort of condition was it in?
Excellent condition.
Really?
Slightly dated in that, they had older cabinets from the 80s. But other than that, they kept them very nice and clean. They just had nothing sexy about them. It was no bells and whistles, darker wood doors, antique white paint, basic carpet, oak cabinets in the bathroom, just nothing that just wows you. Yeah. But the exteriors were in amazing condition. They had just redone the roofs and the patios and the siding and the parking lot. So there was truly almost nothing for us to do on the exterior other than power wash.
Wow, that's huge. And it's in your own backyard too. So what was that like? I mean, going from single family to a $6.5 million multifamily. And that surely was a little nerve-wracking.
Amazing. It's something I'd wanted to do for a long time, Ken, but I just didn't have the capital to take down something that large. Yep. And I understood syndication because I had an SEC background from my corporate job that I was still working at that time. But I really didn't think that I could get into that large of a deal without having a significant amount of capital. So we needed about $2.2 million for the down payment and all of the, closing costs and the updates that we were going to put in. Yep. And so it was super exciting to be able to find the deal and say, okay, now I have a deal that I can't take down. How am I going to take it down? And I contacted someone who we had a good relationship with. We both spoke at a whole lot of local RIA groups and kind of had an acquaintance relationship. And we had just met literally 2 weeks before to talk about doing some larger multifamily together. And I found the deal, went to him, we brought in another partner, and we were able to take it down, just the three of us. So it was just an amazing feeling to be able to jump into that space that I'd wanted to do for a long time.
Wow. So the two other partners then brought the money?
Yes.
Basically, you didn't have to raise any additional money. That's pretty awesome.
Correct.
Raise that kind of money with only 3 people.
Yes. And the great thing about these deals too is with these apartment deals, you typically get an acquisition fee. So I got a 6-figure fee for putting the deal together and bringing it together. Yeah. And then I can benefit, from the cash flow, from the upside when we sell, and the asset management of the deal. So for me, it's a high, $700,000 to $1.4 million deal for me, depending on how long we hold it. Yeah. With no money out of my own pocket. So it was just a home run.
That's amazing. Hey, so talk for a minute, because you're well-versed in this area. Talk for a minute about how people typically structure JVs in the multifamily space.
It really is kind of whatever partners are willing to do. Syndication, when you start getting bigger deals where you have to raise money from a whole bunch of people, those have more of a standard structure. When it's a JV and it's just a couple of partners, you really can kind of figure out what's a win-win for everybody. And this was no exception. When I came into this deal, I thought, I'm bringing the deal. I'm bringing a great opportunity. I want X percent. Yeah. Well, when I brought partners on and they kind of pushed back and said, this is what's important to me. And it wasn't necessarily in alignment, But I understood the power of not having to go out and syndicate and being able to create a great relationship with someone that I could continue to do deals with.
Yeah.
And so I had to learn to kind of, swallow my pride and negotiate and figure out what's a win for this money partner and what's a win for me.
Yeah.
And so for me, my non-negotiable was I wanted a bigger acquisition fee. And part of that, Ken, is because I had a goal to retire. So I had built up my flips and my rental properties on the side as a side hustle while I worked for AIG for 20 years.
Oh, wow.
And I knew I needed to pay off a whole lot of debt. And so this deal was going to help me to jumpstart that retirement. So I gave him a little bit more ownership than I would have liked, but I still got a great amount of cash flow and I got an acquisition fee on the front end, and it ended up being a win-win. And we've now done 2 additional apartment complexes together. So at the end of the month when we close, we'll have 200 units together with just 3 owners that make a great amount of cash flow.
That's amazing. Now, have you guys had any success raising rents yet in the building?
We have. It's been really great. So we did a 5-year projection because typically these properties, if you're going to sell them, you're going to do it in a 3 to 5 year process. And so by raising rents on every tenant $75, we were able to meet our year 3 projections. So we basically went in, Ken, and said, okay, these buildings are rented at least $100 to $200 below what the complex next door is asking for the same units.
Wow.
And they're actually the same builder. So we thought, if we put in $3,000 to $4,000 per unit, we knew we could raise those rents to at least $200 a month. But we said, let's first try to keep the tenants there, see if they'll take a $75 increase. And we knew that they would, Ken, because a 2-bedroom apartment, if we raised them $75, they could not even move to the apartment complex next door into a 1-bedroom for the same rent.
No way.
So they knew that they really couldn't find as nice of a place for anything more than about $100 to $125 more a month.
Yeah.
So for us raising them $75 and telling them we're going to do these things for you, we were able to keep probably 95% of the people that we raised the rents on without doing anything or spending any money.
Really?
So that was the first thing we did. And then as tenants moved out, we went ahead and did our interior upgrades, which we spent about $3,000 to $4,000 on, depending on the condition of the unit. And we were able to not only meet our projections, but push the rents even higher. So, for example, we had a 2-bedroom apartment that was renting for $750. We're now getting $995. And so when you do that and you do it across 70 units, you're forcing the value of that property $1 million in a year. We've already raised the value of that thing in 10 months, actually. So it's exciting.
So the plan is in 3 to 5 years, sell it at a 6 cap potentially. Is that kind of what the market would bear? But at what price? Because you bought it for 6.5. What do you think you'll sell it for?
Sure. So we model our deals as selling in 3 to 5 years. However, the beauty of a JV is that if we find this deal to be a sweet, sweet deal, which we do in terms of our cash on cash return and the money that we're making in the market, we may just decide to hold this thing for 10 years instead of flipping it. Yep. And at that point, instead of selling in 5 years, we would cash out, refi, our cash, and then we would just continue to hold it at that newer, higher value. But if we were to sell in year 5, we would make $3.5 million on that deal, all in, including the upside and the cash that we've made over 5 years.
Golly, talk about an amazing cash on cash return. That's nuts.
Yes, it is
what a great buying opportunity for you guys, though.
Absolutely.
So the debt that you put on it, was it just a short term, like a bridge debt, or do you have long term debt on it already?
No, I'm very much a firm believer, especially at this point in the market cycle where I think we're heading toward hypersupply or recession, not using bridge debt unless it's absolutely absolutely necessary for just a couple months. So the great thing about these large apartment buildings, which a lot of people don't realize, Ken, is that you can get agency financing like Fannie Mae and Freddie Mac, and it's 30-year fixed interest financing.
Wow.
So on this particular deal that we bought last December, rates were higher, but we were super excited to get in at just over 5% for 30 years, with 25% down.
Yep.
And the ones we're closing on the 96 units that we're buying now, we're in at 3.74 for 30 years at 75% LTV. So the financing is another reason that these things, really cash flow very, very well and make great investments to hold until you get to the point where you're going to sell it and realize that upside.
Yeah, it's amazing.
Yeah.
So this is your first, what's amazing is that your best deal is actually your first multifamily deal. What did you learn kind of through the process? What can we take away from your experience?
Sure. I think I learned that for a long time, I was kind of a lone ranger, and I did a lot of flipping and small rentals on my own. And you eventually kind of get tapped out, and you can borrow hard money and private money, as you know, like most of us do. But by being able to partner with other people that can each bring something different to the table, it becomes much less stressful and needs a lot less of your own time and money to be able to make significantly larger returns that actually you can bank on for several years than doing this very transactionally and having to find the next deal and find the next deal and doing it all on your own. So I learned really to give up a little bit of control and to give a little bit on, my idea of a percentage that I needed in order to create win-wins for everybody. And it's just kind of propelled me to be able to continue that model, to be flexible in the type of JV partnerships I create, and really being able to know that I can take down much larger deals, even if I don't currently have the capital to do it. Mm-hmm. And it just gave me that another level of fear to overcome. Even investing for 20 years and knowing real estate, you always do the next bigger thing and you're a little afraid, like, can I really pull this off? When I found this deal, I thought, can I really pull this thing off? And in a small town where everybody knows everybody, you don't want to get under contract and not be able to close. Yeah. So, I just said, I'm going to do it. I'm going to figure this out. I'm going to get creative and I'm going to find a way to make this deal work. And now that I've done it, it's like, okay, I have no more fears. And now I'm doing bigger and bigger deals, not only here, but throughout the country.
Yeah. It's the confidence thing. Like once you've proved to yourself that you can do it, then you've got the confidence to go out there and do more, which I think
absolutely.
is awesome.
Mm-hmm.
Yeah. Well, and so the takeaway again, relationships, right? Relationships with the right people, the potential JV partners, people that can bring money into a bigger deal. And kudos to you for building those relationships.
Thank you so much.
Anna, this was awesome. Thanks so much for coming on. We appreciate it.
Thank you. It's been my pleasure.
All right. Talk soon.
Thanks.
Thanks for listening to the Best Deal Ever show, brought to you by BiggerPockets. If you've been energized, entertained, or enlightened by today's show, please feel free to hit the subscribe button. You can also follow me on Instagram and Twitter at Ken Corsini, or check us out online at redbarnhomes.com. And don't forget, one man's best deal ever may be the inspiration you need to create your next best deal. So, hope to see you on the next episode.